So if you got in on any one of these and it went south on you, you already know if it falls below VWAP, you would get out, right? Otherwise, you can scalp it here, sell it when it pops up. Doesn't matter because we don't know where it is now. Of course, we know now because we can see the channel, right? So it's here, 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 right? This is the channel. You guys can see it. It's repeatedly doing it. So basically, if you're looking at this, you buy here, you sell here, you buy here, you sell here. Now, if this was a stock that also had a short, which it's not, up here next to it, this would say short. So, now this is way more advanced. If you have a margin account over 25,000, you know that you can have unlimited trading. So if that was the case, you could do multiple things. You could buy here, sell here, and then short here, and then sell here, buy here, and then do the same thing here. So really, we're doing multiple actions, right? So we're buying it on the bottom. It touches the top of that channel. We sell it out. We know that then most likely it's going to go back down. So now we short it because shorting means I'm going to the downside. And then we sell it again when it comes down here. And then we're anticipating the bounce of the bottom of the channel. And then we're buying here and repeat rinse. Now, I know that one was super advanced, but those are some of the things you guys can do throughout the day in the market. This is why I always tell you, we don't care if the market goes up. We don't care if it goes down, right? Because we all know in here how to make money both ways. Now, if you did not, and there it goes. Look at it. See it pulling back down to the down channel right here. If this was a regular market hours, instead of, if you didn't want to buy those shares, you could do the same thing in regular market hours that I just did, except the nice thing with regular market hours is you could also use the stops, which is perfect because then it can't burn you up. Example, if you bought it here, your stop would be here. That way, if it does go against you, no harm, no foul. But we want it to ride back up to this channel to get our sell, right? So here's our protection during market hours. You are protected with your stop, right? Which we just don't get in pre-market. This is why if you're going to do it pre-market, just do it with smaller dollar amounts. And then you would do the same thing up here. If we were shorting it to the downside on the bounce of top of resistance, meaning we want it to go back down, well, now our stop would be right here, right? Just above it. So same thing. If we have our stop right here, right? And it does decide to finally make that one run up, well, no harm, no foul. We've got our stop. It's either long candle through, I'm out, or a small candle with another candle, right? Which is confirmation. Because if we have a long candle through, remember, any long candle that pops through, it has a long way to come back. That means I don't want to be in that. Otherwise, what'll happen is a candle will break through and then it'll just come right back up, right? Those one little pop throughs where a little wick comes through doesn't phase me one bit, and it never should for any of you. So when I say a break and hold, which is where you want to stop, your stop needs to be a break and hold. So that if you guys ever notice when I put in my stop, you don't see me drawing a line right here and I say stop, right? You will never see me put it right at the line. That's not where the stop goes. Your stop needs to go below it because it could candle through, nothing, buy, right?